It's a special broadcast coming to you live from the Michelangelo Hotel here in Sandton, Johannesburg, South Africa. Now, as you well know, the Minister of Finance in South Africa delivered his budget speech for the 2011-2012 fiscal year. Yesterday, no real surprises, but a lot of reinforcement, some people would argue. Expenditure will rise over 920 billion South African rands, despite a revenue shortfall. In our defense, though, as South African taxpayers, more of us are beginning to contribute to the fiscus, but just not enough, which means that the government's going to have to borrow. Policy, something that has started to raise concerns. In the speech, the minister reiterated that historically, policy has been counter-cyclical, basically saving during the growth phase, spending during challenging times. South Africa is now on a growth trajectory, but what we're seeing is increased spending. So some could argue what we're starting to see is a policy that is pro-cyclical. That also is a debating point. Of course, there are issues around a bloated civil service that's going to take up about 40% of the budget. There are also issues around social services and just denting the poverty gap, whilst also dealing with many developmental challenges that South Africa is facing. Recurrent and an underlying theme, jobs, 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 reiterating the perspective and the point of view of the President of the Republic, who said that South Africa's unemployment rate at 24% is simply untenable, particularly youth issues and the fact that unemployment could really lead to issues of social unrest in future. So the minister needing to really take cognizance of a lot of social forces, economic forces and exogenous international forces. We are here to analyze the budget and see whether or not it's going to create a situation for better investment within the South African economy and whether it creates an enabling environment for business to operate. On the panel today, Neren Rau, who is the Chief Executive Officer of the South African Chamber of Commerce and Industry. Neren, nice to have you this morning. Paul Theron, a familiar face on CNBC Africa, a man of a lot of wit and levity. We hope to see a lot of that today. CEO of Vestact Securities, thanks so much. And last but not least, Dr. Johan Botha, thank you very much for being with us. He's a senior economist at Standard Bank. Thank you for your time. Later on, we're going to be opening questions to the floor. We've got a range of participants who can also lend their voice and also just reinforce other views and add to the debate. Neren, you first. Jobs, jobs, jobs. Obviously, that was the central theme underpinning this budget. What he's introduced is a jobs fund and also a youth employment subsidy. 9 billion for the jobs fund, but we're not sure how it's going to work. Or are you sure how it's going to work?
Not yet. Our key concern has always been implementation. We expected the allocation to jobs. It was confirmed by the state president a few weeks ago that there would be strong allocations to jobs, so no surprise on that front. I believe that the implementation process will be negotiated between government, business and labor. These challenges are not always easy to deal with in terms of reaching the targeted audience or the targeted market. So it has to be a negotiated process to ensure that we achieve maximum benefit for the economy and to ensure that the three major constituencies, government, business and labor, all have their respective objectives dealt with in the process. So let's hope it's not going to be too protracted and that we can find a common vision as quickly as possible in terms of how we want to access this funding.
Besides the Jobs Fund, Paul, is 5 billion rands to be disbursed over 3 years in what is called a youth employment subsidy. Others would just call it a wage subsidy. Is it feasible?
Look, what I liked about it was the fact that there's talk now of using SARS in effect to implement these policy initiatives because you give tax credits for companies that can prove they're doing something. So it's a shift away from creating a plethora of acronym-loaded agencies to attempt to do new things in the economy. So I quite like that focus. Whether or not it's going to wash with the trade unions, though, remains to be seen. And we know that the ANC operates within a political alliance that sometimes restricts it in terms of what it would like to do. So we'll have to see how it comes out in the wash, because, of course, he's alluded to this being a proposal that still needs to be consulted, by which I suppose he means the various forces that would either be in favor or against such a thing.
Dr. Botha, the likely uptake by business. I mean, one of the criticisms is that although companies are recovering, balance sheets are looking a lot better, jobs are not being created by the private sector. Are these sorts of initiatives likely to incentivize business to hire more?
Yeah, I think so. Let's hope so. Certainly business is at the moment not really creating new jobs. The growth in jobs that we've seen in the fourth quarter last year basically came from government. So yeah, it's difficult out there, and business is not quite certain that the skills levels are there. So, you know, just looking at the broad principle, everybody will agree with that, but the implementation, finding the right people, and of course there are a number of legislation issues coming up which may have negative consequences for the demand for labour, and that may impact on how that is going to unfold over the medium term.
Do you think a jobs fund and a wage subsidy was the right way to go?
I think so. Clearly we had to do something, and certainly that's one way to go. Government has also said that they're not quite sure what the impact has been of this youth fund that we've seen over the last number of years. So, yeah, quite clearly it's easy to budget and to put numbers there. We must make sure that it's spent effectively and actually reaches the ideals that we have.
Consultation, Neren, you've also referred to it. Obviously, your constituency is South Africa incorporated. Some people would say, why would Labour have a problem with the wage subsidy?
Well, Labour would have typically wanted more in terms of government's direct contribution. So there's always a raising of the bar. It's a preemptive strategy in terms of the negotiations that are to follow. Secondly, Labour has concerns that there's room for abuse in terms of the wage subsidy program. There's lots of economic criticisms against subsidies, but this is a good opening bet in terms of the way in which we have to deal with this challenge. And as I said, the key thing is to get to operationalizing the program as soon as possible so that we can guide it in the right direction. The longer we take to operationalize it, the less time we'll have to fix it. If it's going in the wrong direction, there are risks, and I think that's what Labour is concerned about. But as business, we believe, again, to support Dr. Botha, that any initiative to deal with this challenge, any support from government that they could provide to business in these very difficult economic times is welcome. Business does want to hire in massive numbers. We're just constrained from doing so because the economic support is not there for us to do that, and a subsidy would help. I also believe that the subsidy would make a dramatic impact in rural areas where SMEs are the key employers. They often have difficulty employing any significant numbers because of the economic circumstances they find themselves in. And if you provide a subsidy, it would allow those businesses to grow in those areas, contribute to development in those areas, and also for those youngsters who don't want to move to the cities, provide them with opportunities where they live.
929 billion in state spending, and then we'll talk about how it's been allocated, but effectively a much bigger state because non-interest contribution effectively is going towards public sector wages, 40%. We're getting a bigger state. Is that a concern? Look,
the trajectory is clearly larger, and that wouldn't necessarily be seen as positive in all quarters, but as a percentage of total GDP, South Africa's state is still comparably, suitably sized for the nature of the economy. If you start to add in all of the other tiers of government, by provincial and local, and then you start adding in the parastatals, you're starting to talk about a larger contribution to our economy. But, you know, we could compare ourselves to many other developing countries which have a far greater problem, where we talk about countries like Egypt and others where, you know, 35% of people were employed by the state, where the state really functions in all sectors of the economy. We have parastatals, and, you know, for many that is a problem, for some that's an opportunity. But I would say we've got a kind of appropriately sized public sector. The question of whether or not that should be the principal focus of job creation, I think, is debatable. We know that government is now committed to filling all vacancies. We know that as a result of some outstanding union organization, we've had a substantial increase in the average income of public sector workers. And you mentioned the number, 40% of the total budget spend, a doubling of net salary bill for the state over the last couple of years. That is an area of concern because that's not the growth engine of any economy, that's the part that feeds off the growth engine.
Dr. Botha, your views on this one? I mean, about 73 billion is allocated towards a public works program, so government has to create jobs, government has to introduce more civil servants. Is this a productive use of South African taxpayers' money?
As long as you increase the capacity of the economy to produce, that will be productive. It's not quite clear to me that if you increase the number of people working for government, that will necessarily translate into a more productive economy. You must remember that in calculating GDP, for example, and looking at government's contribution, it's actually done by taking the wage bill, and that's seen as the contribution to GDP. Quite clearly, you don't really think about efficiency and effectiveness from that angle and what is actually produced by those people. So, yes, I think it's still within reasonable limits, but hopefully, going forward at some stage, we will have to swing the thing around and let the private sector grow the economy.
Neren, you represent private sector, and we can criticize the government here and say a bloated wage bill, it's not the government's job to create jobs effectively. Government says we're sitting on a ticking time bomb, and if the private sector can't act, we must act. Why are you guys slow to act?
As I said earlier, it's the economic circumstances in which we find ourselves right now. In addition to the economic circumstances, there are a number of policy areas where there is still contradiction and conflict and concern from the private sector. There's a potential policy direction in which we could move, which would cause the private sector to be reticent. And here I speak specifically of the labor bills that are out there for comment right now. So there is concern in the private sector, in addition to the economic momentum just not being there. So in these times where the private sector is slow to respond or can't respond, more realistically, the government has to play a role. And that's the point of being counter-cyclical, for it to act when other elements in the economy cannot act or are constrained from acting. So it's really very much a constraint. We're also facing the prospect of rising costs on other fronts, which then puts pressure on business in terms of its ability to grow its own wage bill. So you've got administered prices that are increasing at dramatic levels, and there's just isn't sufficient financial capacity to go into the labor market as aggressively as we would like to.
We've got inflationary pressures creeping in, higher oil prices, higher food prices, higher costs of doing business, as Neren is suggesting. Those are all sort of beyond the ambit of what the state can control. What is it that government could do to catalyze a lot more private sector intervention and therefore withdraw from this job creation strategy?
Look, if you look at the industrial policy that South Africa is currently implementing, there is a substantial focus on infrastructure, and you might argue, well, it's about time, because if there'd been a better focus on infrastructure a decade ago, we might not have had some of the bottlenecks that we have. But nonetheless, that is there and it's been recommitted to. So government is there and providing the necessary financial guarantees as well as the direct spending to do these things. Industrial policy used to be about taking areas where you were strong and looking to extend and advance those. So we know we have a mineral-oriented economy, beneficiation is there, but there are also parts of the economy like agriculture, like construction, like mining, which are highly labor absorptive, and those would, I imagine, be the ones that one would look at. But I think there is a recognition in government circles that the statist approach, where you tinker with the engine rather than letting it run by itself, is not really what works. So I know we sit here and we like to hammer on government for not doing the right thing, and particularly perhaps from a business point of view. But I think there's an adequate recognition of how these things work, and I know that government is trying to do its part, but is keen to create a context where people are prepared to make the investments that Neren and his colleagues are looking for. It's just that sometimes they can't help themselves, and a conversation arises about, mine nationalisation, or some intervention which is really not conducive to a happy long-term future.